Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and some momentum has faded for the markets at 11 o'clock. We started off with a high, the Nifty crossing 24,400, the Sensex climbing above 80,300. We're holding up in the green, but we've come off from the highs in the last 30 minutes. ICICI Bank and Infosys have nearly contributed about 50 points to that Nifty up move. Pull up that contribution plate and you will see it's ICICI Bank, Reliance Industries, ITC, Infosys. These are some of the stocks pulling us up higher, but we're weighed down by HDFC Bank. HDFC Bank is the big culprit today. It's down 2% today, but week to date, it still has a gain of close to about 3%. And to me, I can't take my eyes off these defense stocks, right? Day after day, eye-popping rally. So today, Mazgaon Dock Shipbuilders is up 5%, and the stock has crossed 1 lakh crore in terms of market capitalization. Garden Reach Shipbuilders is 100% up in the last 1 month. So they anyway rallied in the first 6 months in anticipation of the election verdict. And even after that's come through in the last 1 month, it's a 97% up move. Cochin Shipyard is up 45% in the last one move. And just last 1 month, I'm sorry. And just as an important update, US markets, remember, are shut today. So perhaps even Europe could trade a bit subdued in terms of volumes.
Well, as I say, hindsight is perfect 50-50, right? 6 on 6. I mean, the election verdict day, these stocks were collapsing and one was wondering whether this is the end of the whole PSU party, the end of, defense as a theme. But in hindsight, that ended up being a great buying opportunity. But anyway, for the market, it's there is a cool off, but that's not before the Nifty reached another milestone, 24,400. The cool off is happening largely because of banks, and it's not only HDFC Bank. That one started the day negative, giving off some of the momentum from yesterday. But now a lot of the other banks, look at Axis, IndusInd, State Bank of India, barring ICICI Bank, the short point is that all other frontline banks are not doing well. Pull up the bank Nifty and that will kind of complete the picture. There's ICICI on one side and everybody else on the other. And that explains the kind of sell-off that we're getting on the screen as of now. Aside of that, a couple of other stocks like Bajaj Finance, that's interesting. The update was great in terms of, the AUM growth, which is 31%. But again, not much momentum on some of these high flyers from the financial space today. So let's keep our eye out on it. But then as Reema pointed out, it's IT that's really fighting for the bulls. And let's see if that can stay intact. Also, Reliance, by the way, Reliance was an underperformer yesterday. Right now, for what it's worth, it's on the upside with about a 0.5% gain. So IT and Reliance are the big fighters for the bulls. Now, let's get you some more perspective on the market. Just a month back, the market saw a massive crash. That was exactly the 4th of June. That was the counting day, remember? And we've come a long way since then. Hormaz is standing by with a quick snapshot of what we've seen in the last 1 month. Hormaz, 1 month can be a very long time and a time that the bulls have celebrated.
The bulls have celebrated, and how? And it was this day, the 4th of June, when the day the Lok Sabha election results were declared. And who would have thought that from almost slipping below the 21,000 mark that day, the Nifty would be making record highs every single day a month later. Now, here's how the market has looked a month from that day, which is the 4th of June. Now, the Nifty made a low of 21,281 that day. Now, it is up 3,000 points from those levels as of closing of yesterday. Now, the bigger performer, though, has been the Nifty Bank. Now, with a 7,000 point rally, as you can see here, from levels of almost sub 46,000, making highs of around 53,000. Now, let's take a look at this in a more broader context, now in percentage terms. Now, the Nifty is up 11% in the last 1 month. The Nifty Bank is up 13%. Now, this I'm talking about closing levels of the 4th of June to closing levels on Wednesday, which is the 3rd of July. Now, remember, the broader markets had a bigger fall that day, and with both the mid-cap and the small-cap indices declining 8% and more, but the rebound has been equally fast. The mid-cap index is up 14%, the small-cap index even better, now over 19% from the lows of June the 4th. Now, let's focus on the indices individually. The Nifty up 11% in the last month, 49 out of the 50 stocks gaining, 24 stocks gaining over 10%, and 4 stocks gaining even between 20 to 25% during this period. Now, Shriram Finance, the latest Nifty entrant, is the top performer here. Now, Wipro here comes second, and the recovery in IT stocks is evident as 5 out of the top 10 gainers on the Nifty in the last 1 month are IT stocks. Now, but which is the one stock that has given negative returns in the last month on the Nifty? And that is India's largest passenger car maker, Maruti Suzuki. Well, the losses aren't significant, but are losses nonetheless. Now, HUL, Britannia, Bajaj Auto are some of the other underperformers, and by that I mean they have not seen significant gains like the 20-30% kinds during this period. Now on to the mid-cap index then. 95 out of the 100 stocks gaining, 25 gaining over 20%, and 63 stocks seeing at least double-digit returns. Now, at least 10% or higher. Now, the top performers here, well, unsurprisingly, it's Masgao Dock. You just spoke about that, and what a move the stock has had. 75% in the last 1 month, crossing a 1 lakh crore in market cap, and multiple news points here. Now, fact, moving in line with the fertilizer theme in general. Dixon Technologies also making one new high after another, and Oracle Financial, which has moved higher after some positive news flow for its parent company in the US. Now, the underperformers here in the broader markets, BSC. Now, after a dream run that the stock has seen, the stock is seeing some bit of sideways move, some negative news flow coming in there as well, and HPCL too, after the run that it has had, seems to be taking a bit of a pause. Now on to the small caps. Now here too, it's a 99 out of 100. The stocks that have returned positively, 44 have gained over 20%, and 77 of them have seen at least double-digit returns. Now, Amara Raja is the top performer here. Now, is that even a surprise considering the moves that we have seen in these battery names? Titagar too has been a multi-bagger in recent times. Now, in fact, among mid-caps, it was fact among the mid-cap stocks and Chambal among the small caps within the fertilizer theme have emerged as the top performers. Now, the only negative small-cap stock here, it's Ujjivan Small Finance Bank, which is down around 2.5%, and IRB, Blue Star are some of the other performers. But there is a pocket of the market which is yet to recover their losses, and there are select PSUs. Now, the PSE index made a high of 11,353 on the 3rd of June, which was the exit polls reaction day, and is still ended around 500 points away from those levels on Wednesday. Now, take a look at these. The stocks that will come up on your screen, these are the top 5 movers on the PSE index since the 4th of June, and barring Oil India and HAL, the others are yet to recover their losses. REC and PFC, the high-flying PSUs which fell over 25% that day, are still below the highs of the 3rd of June, and that has been the market in the last 1 month so far. The color is overwhelmingly green, and investors continue to hope for monsoon clouds to hit the city, but they would surely hope for the sun to keep shining in their portfolios for sure.
Very well put. Thank you very much for that. All those data points. Earlier today, we had a chat with Ramdev Aggarwal, Chairman, co-founder of Motilal Oswal Financial Services. Listen in to what he had to say about the Indian markets.
Year after year, for 44 years, I have seen this market growing at, I didn't know that it is 16%, I thought it is 15%. This is a 15% country. India is a 15% country. So, I have seen, I mean, like every 5 years it doubles, like from 40,000 to 80,000 it has become in 5 years, exact. So, it's about 15%, and longer term is also 15-16%. So, there is no reason to believe that going forward it will be anything significantly different. It might become 14, it might become 16. So if you go at 15, I mean, let's keep the base at 15. In 5 years flat, 2029, you will be 1,60,000. Retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from not from the top end of the population. Risk capital will come in a truly distributed way from across the country, and that is the revolution which is on. We are seeing a lot of supplies coming in from existing promoters and FIs. FIs have been supplying for last 1.5 to 2 years. Now they also seem to be tired. Now it is all for the new companies which are not listed. So 100% owned unlisted company, they are coming with the IPO. Almost every day there is 1 or 2 IPOs. I think it will be a record year of maybe 200 IPOs or at least 160, 170 IPOs. Almost every other day you will close 1 IPO, and there is no season in the sense that entire 365 days it is open.
All right, that was Ramdev Aggarwal. You'll catch more snippets from that really interesting conversation all through the day. But for now, we do have to take a break. Coming back with the latest buzz from the commodity universe. Welcome back. You're with us on Trading Hour. And before we talk commodities, let's talk cricket. The excitement is really palpable. And right now it is Delhi greeting the boys in blue. Those are some visuals. The team left the hotel just a little while earlier. They were staying at ITC Moria. And they have been on their way to meet the Prime Minister. And of course, you can see the excitement on the streets as well. Those are, of course, the champions returning home. The schedule, obviously, is that they go ahead and meet and greet with the Prime Minister. And then they are to fly to Mumbai with that big event lined up in the evening, the Open Bus Champions Parade. So there you see a lot of excitement, of course, around the grand reception and the welcome back. Okay, obviously, the cheers and the excitement really out there to see. Well, we'll keep getting you snippets as and when we get more footage, more coverage. And of course, we're live here in Mumbai as well when the boys arrive. And of course, we'll keep you updated. For now, commodities as promised. And apart from Team India, what else is shining bright? I think it's the metal space. So let's ask Manisha more about it. Manisha.
Well, yes, cricket is one part of it, but in commodities as well, we have seen excitement come back in case of metal prices. The month of June was not so great, but July definitely has brought cheer around. And that is because there is decline in the US dollar index and the treasury yields. And that in turn definitely seems to be supporting many of those commodities. On your screens is the overnight gains that we've seen for many of them. So silver prices have gained up by 3%. Today actually is the sixth straight day that we have seen gains come in for the prices. And if you look at the month of July until now, I mean, we had four days alive there, and we have seen prices gain up by almost 4.5%. Copper as one is trading at 1 month highs. It's 2.5% of gains onto that one overnight. The Chinese inventories have declined to nearly 1 month lows, and that clearly has been supportive. Third week of decline, by the way, coming in for the decline in copper inventories. Iron ore prices also are trading at a 1 month highs. The markets are anticipating better demand going forward. We also are looking at steel prices. I mean, these have been major laggards really when it comes to ferrous metals. The first quarter actually saw steel prices also decline to a 7-year low at one point in time. But we are looking at strong gains come back for this one as well. And gold on your screens is back above $2,350 an ounce. It is a 1 month highs. It's trading at a 3-week highs in the Indian markets as well. And we have seen more than a percentage point of a gain coming in the overnight markets for that one as well. Well, you have seen strength come back because it is a high probability right now that you could be looking at the first rate cut coming in the month of September and a second one in December. That seems to be supportive. It also has to do with the kind of data that we have seen from US. So whether it has been about ISM services, that has been contracting the most since 4 years. Also, when you look at the manufacturing numbers, those have declined. The US jobless claims have gained for a 9th straight week. And the kind of testimony or speech that we saw coming from Powell has been dovish at best and suggesting that there could be a rate hike. Inflation seems to be declining, and we are looking at improvement in outlook from Chinese demand as well. The Chinese plenary meeting happens in the month of July, which will set policy for the years to come. And the expectation is that there will be support for infrastructure, housing, property as a sector, and that would mean more demand coming in for metals there. Well, apart from all of that, and before that, you have the US non-farm payroll data that comes in on Friday. So data heavy week and month, and there is support in the meanwhile for metals.
Thank you very much for that. That's the big story. Get into a break. On the other side, we'll talk corporates. We'll be joined by Debanjan Kumar, CEO of IDTC, the digital commerce division of Intellect Design, about a new platform that they've launched, and they're targeting government's public procurement space. So we'll discuss this in greater detail on the other side. Welcome back. We're weighed down by the financial space. So the Nifty banking index is down 200 points. The culprit there is HDFC Bank. But even something like a Bajaj Finance, where the numbers look good, their AUM growth was 31%. The new loan growth was 10% on a year-on-year basis. Eye-popping numbers. And for the first time, the new loans had crossed that 1 crore mark. Remember, RBI had also lifted the restrictions in the month of May, 2nd of May, so issuance of EMI cards was allowed. So that aided the business momentum. But look at the way the stock is reacting. In the last 1 month, it's already rallied 10%. But despite a seemingly good Q1 update, today you are seeing pressure on the stock. Bandhan Bank is another one which is down close to about 1.5%. It was about a 22% kind of an advances and deposits growth. But Nomura has come out with a note and they have a reduced call on Bandhan Bank. Their target price is 170. They acknowledge that loan growth has picked up and it's fine, but the CASA has declined for Bandhan Bank. So that's one of the reasons why they are a bit, subdued. Other than that, it's, Gujarat Gas, where there is an update coming through in terms of brokerage notes. Remember, yesterday there was news about the price hike taken. They've hiked the industrial gas prices that came in the second half of yesterday's trading session. But Citi has a sell call on the stock. They're saying that volumes may get impacted because of the price hike. So they're a bit concerned on the margin front. So that's about Gujarat Gas. But other than that, the Nifty is holding on. Markets are holding on to all their gains. And once again, it's IT fighting for the bulls. It was all about IT in the first half of the trading week. Yesterday, IT took a bit of a pause. But once again, the Nifty IT index today is up 1.6%, holding the markets up. In fact, that gives me my cue to invite Intellect Design Arena. So their new line of business is called Intellect Digital Technology, IDTC, which is particularly for commerce. And this IDTC has launched a new product called IGPX, which is a public procurement platform. This platform that they've launched aims to transform public procurement globally. To talk more about it, we are joined by Debanjan Kumar, CEO of IDTC, which is the digital commerce division of Intellect Design Arena on this new platform. Debanjan, thank you very much for joining in. First, if you could just briefly explain this new product that you've launched. What exactly is public procurement for the government? How big is the market? And what is the role that your platform is going to be playing?
Thank you very much. Thanks for having me here. So as you understand, Intellect, our bedrock is innovation through first principle thinking. So what we did is last year we launched eMAG.ai, our open finance platform, which is the most comprehensive and large financial platform, open finance platform. So what we did this year is that we studied the commerce landscape and we saw a lot of similarities between the finance and the commerce landscape. So we decided to expand our eMAG.ai platform to the commerce landscape. So that was the first inspiration we took while launching this GPX product. The second inspiration we took from is our experience of running GEM, which is one of the largest public marketplaces in the world for the last 6 years. So when we took over GEM in 2017, the procurement through the platform was around 4,000 crores. And when we left, the contract ended in December of last year, we surpassed 4 lakh crores. So we completely transformed public procurement in India through the GEM platform. So what we decided is to take this, both the domain and technology skills, to the global countries. And what we did for GEM is what we want to replicate for the other countries. So the market, as you asked me, is pretty huge. As per World Bank estimates, public procurement today varies anywhere between 12 to 20% of the world GDP. And current estimates are around $13 trillion US dollars. Now, if you look at the wastage, which also the estimate is that the wastage in public procurement is as high as 25%. So we are looking at, a 1 trillion to a 4 trillion kind of number out here. So we feel the headroom is pretty high to go and kind of transform this space. So that's how we have launched IGPX with this inspiration of transforming public procurement in the globe.
Any early estimates of what this might mean in terms of a revenue potential for you? You've given us the market size, about $13 trillion, which includes a significant wastage. But for Intellect Design Arena, what is the revenue number we're looking at?
So, ma'am, right now, we are in the silent period. Our results are due to be published very soon. But I think we are very bullish about this product, and we are already started discussing with certain clients. So once I think our silent period is over, I can share more with you on the number side.
And this is, you'll be only catering to the governments, right? There is no private client of yours, private customer, for whom you'll be working. Debanjan, can you hear me? Okay, I think, okay, there seems to be a bit of a connection issue, but that's Intellect Design Arena. Hard to give numbers ahead of, given the company is in a silent period. But according to the company, this public procurement platform has immense potential given how large the market itself is, and they will be largely catering to the governments in India, governments in the APAC region, is what, Intellect Design Arena is looking. But remember, this is going to be a part of one of their 4 verticals. The company has 4 verticals. In one of the verticals, which is the digital commerce vertical, the company has launched a new product. Other than that, here's what we'll do. We'll slip into a very short break. We'll come back and try and reconnect with Intellect Design Arena.
Hello and welcome to this very special edition of Newsmaker. There can't be a bigger newsmaker than Nandan Nilekani. It was he who made digitalization a public good in India. With the father of Aadhaar, can I call you, without making you feel too old? Well, the reason why it is very important to hear out Nandan Nilekani now is that there is a new phenomenon in artificial intelligence, and a lot of people out there are looking out to you to check out, is it a constructive force? Is it a difficult force? Disruptive force? So that's really the first question. And I'm going to quote your previous speech where you said India wants artificial intelligence applications that benefit all citizens. It is not competing for large language models. But the Indian path is that we want to we are here to make a difference, and our aim is to give this technology in the hands of people. You seem to be a man with a plan. What's in your mind?
Yeah, so I think India has benefited hugely from digital public infrastructure, or DPI, and Aadhaar, UPI, and all these things have transformed the way we live. We believe AI has similar transformation possibilities. AI is a very powerful technology, but it's a technology like anything else. And we have to use it appropriately, safely, with the appropriate guardrails. And if we do that and apply it at population scale, then we can make even bigger impact on people. So we call this DPI to the power of AI. We sort of take DPI to the next level with AI. And we have a number of things on that front which are happening. So yes, there is a plan, and our view is that technology is only as good as its use. And we also believe that large language models will be commodities. There are going to be many of them. Every day there's a new announcement. There are many people spending money building these models. It's not the models, it's how do we apply them to make a difference. And that's where India's focus, I believe, should be.
Yeah, I mean, absolutely. After UPI and the big splash it has made, around the corner, everyone is looking to you, whether it'll be ONDC, account aggregators, and now AI. But before I come to that, you need to clarify the fear that people have of AI as well. Yeah. Do you fear that before it becomes a constructive force, it may take away some jobs?
Well, I think there are many fears about AI, founded or unfounded. One is, of course, that AI will hugely automate and reduce jobs. Now, that's a fear we should take into account, because anytime a new technology comes, some jobs will go, but new jobs will come. And there'll be a period when maybe the job loss will be more than the job gain. But fundamentally, I think in India, we have to think of it differently. If we can use AI to amplify services to people, if people can get better education, better healthcare, better farming knowledge, then actually it has a very positive impact. So if farmers know more about how to farm, they'll do a better job and so on. So I think if we think of AI as amplifying human potential and applied that way, I don't think we should be that worried about AI.
I'll tell you where the worry got a little substance. For the first time in my coverage of IT companies, if you just took the top 5 companies in the Nifty, the aggregate numbers they hired was negative 62,000. Until now, we have seen slower growth, but it was always growth. A reduction in the workforce of the top 5 by 62,000 is a bit of a scare.
Yeah, but I think we have to also look at what are the factors. I don't think it's
not
AI so
AI.
much as you know that in general over the last couple of years there has been a reduction in discretionary spending of
Yes.
client
Is
companies.
that not related to AI?
No. I don't think so at all. I think AI's impact on the enterprise is very low at this stage. It's still many years away from penetrating. So
Okay, so
I
just
think
to explain the
it's a-
62,000?
It's a cyclical thing, not a secular thing of AI.
It's because of uncertainty in
In
the...
general, companies are spending less on discretionary things and stuff like that.
But is there a worry that, I mean, this is a little away from AI, that Indian IT is losing to the GCCs? Because we are seeing global captive centers not let up at all.
No, I think there's going to be a market for everyone.
Okay, so that's not the big fear. And do you see the end of this uncertainty? Do you see people, I mean, are you just getting a sense of...
No, I think everybody is waiting, and as we have seen in many conferences, there's so many things in play that we can't really know we can't exactly predict what's going to happen.
Okay, to come back to AI, you said many applications. Are you already onboarded on anything by the government or by yourself?
Yeah, so I'll give you a couple of examples. One is in the area of Indian language. I think India particularly will benefit from AI in language because we have 22 official languages and several hundred languages that we use, some only dialects and so on. So there's a lot of work going on. There's a government program called Bhashini, which is there. And from my side, I've supported a group at IIT Madras. My family has supported a group at IIT Madras called AI for Bharat, which is building open source tools under the Bhashini framework in 22 Indian languages and making that available as a public good. So that is an example of AI as a digital public good. So idea being that if you have the data and models for Indian languages, then anyone can use that in their applications, be it a government application or even a private application. So one way of thinking of AI is, can there be a digital public good of AI? And Indian language, because it's non-competitive, everybody can use it. So that's one example of AI as a digital public good.
Can you give more examples? That's exactly the conversation I want.
So that is one category, which is building open source, open data models for different users and people can use. The second example is applying these things in education. So there are many experiments going on right now on applying AI to improve learning capabilities. Many states are looking at using AI on top of, again, existing digital infrastructure we have to improve children's ability to read or write or learn basic maths. So basic learning can also, we believe, be enhanced by AI because its ability to figure out a reason what are the gaps in what you know or don't know, and then address those gaps through practice can make a difference. So we think there's a role for AI in education. Third example is, the government is using AI very well. I mean, in the PM Kisan project, there's a bot which actually helps farmers to figure out whether, what are they eligible for and so on. That's actually live as this moment. You can talk to the government agriculture ministry on that. And they have actually using AI in Indian languages to help farmers answer questions, whether they receive the money, what are the eligibility rules, and they're getting thousands of queries. So we're actually seeing live examples of AI being used.
Will all this mean more work for infotech companies?
Well, many of these things are being done either by the government or by philanthropists. So it's not clear whether it's a business opportunity so much. I mean, there will be, but I'm saying in this case.
But at the moment, it's a public good that you're referring.
So I think, AI, there are three things. One is AI as a digital public good, which is Bhashini, AI for Bharat. AI usage, using DPI infrastructure, which is in education and even in agriculture. And third is infrastructure to collect data at scale. Because ultimately in AI, it's the data that matters, not the models. The models, there'll be a dime a dozen. Now, most of the data which is used in the internet is internet scraped data in English. Now, what we need is our data to our situation. So one of the things that, for example, the AI for Bharat has built, they have built tools to collect Indian data or any local data. So then we need tools to collect data at scale. So that's the third part. So you can have AI as a digital public good. You can have AI infrastructure to create data for AI. And you can apply AI along with existing DPIs to amplify education or health and so on.
Fair point. But what about the big fear that we hear in the West about biases? For instance, loans are not given to, for instance, blacks because you use AI on existing data. Generative AI is learning the bias.
Yeah,
Is that also a problem?
No. It's all about training it properly, training it with the right data, using curated data for training the models, using different techniques for ensuring the answers are correct. It's really about creating boundary conditions. If you go and scrape data off the internet and build your models, then the biases of the internet will come in the thing. So you have to do a bit of work to reduce bias and hallucinations and so on. So these are not open-ended kind of AI. They have bounded data which is on a specific, for example, if it's about farmers, they'll process thousands of questions which have been vetted by somebody so that the answers remain within that boundary.
Okay. Do you see it coming into finance in any way?
Oh, yeah.
Insurance, loan giving, credit?
No, I think
Generative AI?
credit assessment and all that, there'll be a big role for AI, whether generative or general AI. And AI will also come, for example, in NPCI and UPI, in that they have the UPI for feature phones, Hello UPI.
Yes.
There they're using Indian language spoken commands. So you can give a command and ask someone to transfer money to somebody else in Hindi or Tamil or whatever. So that's an example of extending the reach of payments into Indian languages spoken to the computer.
Okay.
Welcome back. It's celebration time out here in India because the world champion team India is celebrating. They're celebrating, they're dancing, surrounded by hundreds of supporters who've come. They've had a rousing welcome in Delhi, and soon they will make their way to India also, make their way to Mumbai also, where we can't wait. But that's the captain of the winning team, Rohit Sharma, dancing. The excitement is in the air. Remember, the Indian team touched down in New Delhi early this morning. They were given a rousing reception in Delhi. They will soon meet, the Prime Minister Narendra Modi for felicitation. Then they make their way to Mumbai, where there will be an open bus victory parade that will go through Marine Drive and conclude at Wankhede Stadium 5 to 7. And those are visuals of the entire team. Excitement in the air. All right, let's move on and get back to the markets. Urmesh Sharma of HDFC Securities is now with us on the show now. Thank you very much, Urmesh, for joining in. Wanted to get your thoughts in on, banks first. Bajaj Finance, for instance. The Q1 updates look very good, but the stock is sulking today. It's down 1.5%. And on HDFC Bank too, we had a 3-4 day kind of rally, but it's fizzled out. Do you think that's it now, momentarily, at least in the near term? What have you made of the kind of price action post the news?
Yeah, so look, HDFC Bank is my parent bank, so I can't talk much about it. Stock-specific discussions, a little bit of compliance issues around that. But what I can tell is the fact that I think the key items which are being watched out by the market on the large financials is one is that there is definitely a valuation gap which is there, which makes them quite compelling. At the same point in time, what's happening is that this larger theme is playing out, which is that there is really price discovery happening only in the large caps because the FPIs can actually sell and leave the market, right? So while on the small and mid cap, I think there is a lot of domestic participation with that liquidity trapped within India. So that's the other thing. And then within that, there are individual factors which are technical. For example, foreign ownership, as a result of which there is speculation on whether something gets included in indices, global indices or not. So if you leave all that out, so technical matters out, fundamentally, I think people are looking at one, growth. The second is, and this is speaking from 2 or 3 cumulatively together, including Bajaj Finances, what is the quality of that growth? Because how much of it is coming from cross-sell to existing credit people whom they've given loans to, and how much of it is new. On top of that is the mix, because there is definitely concern that there could be, if there is any credit event, then that is likely to be at the unsecured end. So if you put all this together at this point in time, I think what's happened is that apart from the technical factors of inclusion indices and whatnot, I think, and what FPIs are doing, I think the general point is to look out for the, what is the trend in cost of funds and actually where the growth is coming from, and what is the quality of that growth.
Okay, so let's expand on that. Unmesh, hi, good to have you on the show as always. I guess the technical factor is just one part of it, right? And that'll play out.
Yeah.
But the bigger issue is that will earnings finally start firing up? Are most of the merger shenanigans behind us now? And let me expand the question. I mean, not just HDFC Bank, and we're running into the next quarter numbers as well. Where do you expect pleasant surprises when it comes to banking?
Look, I think at this moment in time, while there are some concerns about what's happening on the credit cycle on the unsecured side, as well as, if you look out, if you look at the growth in some of the NBFCs as well as the small banks, there is this concern which has started to come about. But what's happening is that if you look at the commentary which we are expecting from this quarter, see, backward looking numbers not going to impact that much because a lot of operating updates are out there. Plus, these the financial companies are also very well understood as far as the data is concerned. I think what will happen is that the market is not going to, given the flows in the market, it's not going to react till the bad news actually hits. And what I mean to say by that is that at this point in time, while it's good to keep a close eye on the credit cycle, I think what will happen is that the high quality banks which have what I would say is the outside the top tier of the banks, as well as the NBFCs, will not report any of these numbers and will not be reporting those to come in the next one or 2 quarters. As a result of which, we expect that there should be some buoyancy as far as the market chasing growth is concerned. So, if you look at banks like Federal Bank, for example, which is there in our model portfolio, or some of these, maybe a little bit of the rural theme playing out, or the housing finance names coming through. I think that's what we are expecting to see in this.
Has IT bottomed out, at least in terms of earnings? Do you think this quarter marks the end of any kind of earnings downgrades and things only pick up? And what's your own expectation? Are we likely to see some pickup in growth in the second half of the year, or realistically it's an FY26 growth story?
Yeah, so the answer to all 3 questions is a resounding yes. Our analysts Apoorv and Amit have written a note which came out last night, where they are talking about this. Now, honestly, I'm slightly old school, so I was quite skeptical and kind of questioning whether, this is going to, whether this is actually going to happen. Now, what we are saying in the note is that if you look at amongst the large caps, for example, TCS, and amongst the mid caps, Persistent, for example, which are our top picks in the note as well, what we are saying is 3 things, and all 3 of them are positive. One is the fact that the market is now trying to discount stories even if they are 1 or 2 quarters out. So, while yes, we will see the turnaround happen in the second half of the year, maybe even in the 4th quarter, what will start happening is that the market will start discounting that, and to some extent that discounting has started. Within that, some will move faster than others, and clearly in a cycle of upgrade on earnings, you always see the upgrade as a percentage, and hence the impact being larger on the tier 2 names as compared to the tier 1's names. So, and that's how they are positioning as well. And I think that the answer is that Street is moving in the direction of assuming that what happened last quarter, which is the 4th quarter of last financial year, and what will happen in this 1st quarter will basically mark the end of the downgrade cycle, as a result of which, earnings multiples have started to move up, but we expect that this theme could continue through the rest of the year.
Okay, all right, got it. Unmesh, we'll have to leave it on that note for today, out of time, but we look forward to a longer chat next time around. Thanks for joining in. That's a view from HDFC Securities coming through. We do have to take a very quick break. On that note, we'll come back with more on the markets. Welcome back. Well, before we sign out, just a quick update on the screen. Still about 40 points higher on the Nifty. So it's not too bad. And it's actually IT and ICICI Bank. These are the two big pillars on which this gain is right now resting. Let's see. Bank Nifty trying to, I think, recover from the lows, but we'll have to wait and watch.
Well, State Bank of India is also trying, right? Yeah. It's back in the green now. So that's one of the few, banking stocks where at least there is some green in recovery. Well, folks, but we're out of time completely on the show. Thank you very much for watching.